Did you know that if all the gold ever mined were melted into a solid cube, it would be about the size of an Olympic swimming pool? That's all the gold in the world. Let's take a step back in time. Picture this. Ancient civilizations, awed by the gleam of gold, the shimmer of silver, the radiance of platinum, and the glow of palladium. These precious metals, rare and beautiful, have captivated the human imagination since the dawn of time. They've been used in everything from crafting exquisite jewelry and ornate artifacts to serving as a universal symbol of wealth and power. Throughout history, precious metals have held their value, even as empires have risen and fallen. They've weathered economic storms and have been a safe harbor in times of uncertainty. The allure of these shiny commodities is timeless and universal. Today, these precious metals, gold, silver, platinum, and palladium, are more than just adornments or symbols of wealth. They're traded on global markets, just like stocks and bonds. They're a viable and potentially profitable investment avenue. Each of these metals has its own unique properties and market dynamics, which can make trading them an exciting and rewarding venture. Gold, the king of precious metals, is often seen as a safe haven investment, especially during turbulent times. Silver, often in gold's shadow, is not only valued for its beauty, but also for its widespread industrial applications. Platinum, rarer than gold and silver, is highly sought after for jewelry and industrial uses, especially in the automotive industry. And then there's palladium, a key component in pollution control devices for cars and trucks. But it's not all glitz and glamour. Trading precious metals requires knowledge, strategy, and an understanding of market trends. It's about more than just being dazzled by the sparkle. It's about recognizing the potential behind the shine. Humans have always been attracted to the sparkle of precious metals, but can they really make you rich? Let's find out. Global economic conditions, inflation, and even geopolitical events can turn the tide in the precious metals market. Now let's dive deeper into this. To understand the dynamics of the precious metals market, we need to look at the various factors that influence the prices of these commodities. First up is global economic conditions. When economies are thriving, industrial demand for precious metals like silver and platinum tends to increase, pushing up their prices. On the flip side, during economic downturns, investors often flock to gold as a safe haven, causing its price to surge. Next, we have inflation. Precious metals are often seen as a hedge against inflation. When inflation rises, the value of paper currency falls, but precious metals, they retain their value. So in times of high inflation, the demand for precious metals increases, driving up their prices. Now let's not forget about geopolitical events. Conflicts, wars, political instability, these can all cause uncertainty in the global markets. And when uncertainty reigns, investors again turn to precious metals as a safe haven, bolstering their prices. But here's where it gets interesting for traders. These factors don't just affect the prices of precious metals, they create opportunities. When prices rise, traders who've bought precious metals can sell them at a profit. When prices fall, it's an opportunity to buy at lower prices and wait for them to rise again. Of course, it's not as simple as it sounds. Trading precious metals requires a keen understanding of these dynamics. It requires careful analysis, patience, and sometimes a bit of courage. But for those who are willing to learn and take calculated risks, it can be a rewarding venture. So the rumblings of the world economy can shake up the precious metals market, opening up opportunities for shrewd traders. Exciting, isn't it? No, you don't need a magical crystal ball to predict the precious metals market. You need analysis, technical and fundamental. Let's break it down, starting with technical analysis. Think of it like being a detective of the market, hunting for patterns and trends in price movements. It's all about studying past market data, primarily price and volume, to forecast future market trends. It's a bit like weather forecasting, but instead of predicting whether you'll need an umbrella tomorrow, you're predicting if it's a good time to buy or sell your precious metals. In the world of precious metals, technical analysis might involve looking at price charts for gold, silver, or platinum over a given time period. You might notice that prices tend to rise when economic uncertainty is high, or perhaps you'll see a recurring pattern of price dips and rebounds. These insights can be invaluable in timing your trades for maximum profitability. But like any good detective, you can't rely on one source of evidence alone. That's where fundamental analysis comes in. This is the Sherlock Holmes approach to trading. It involves looking beyond the numbers and delving into the underlying factors that affect the market. For precious metals, fundamental analysis might mean keeping an eye on global economic conditions, inflation rates, or geopolitical events. Let's say a new government policy is set to boost industrial use of silver. As a fundamental analyst, you'd likely predict a rise in silver prices and strategize your trades accordingly. Or maybe there's turmoil in a country that's a major gold producer. This could disrupt the supply of gold, potentially driving up prices. Fundamental analysis helps you anticipate these market movements and plan your trading strategy. It's important to note, however, that both technical and fundamental analysis have their limitations. They're not crystal balls that can predict the future with perfect accuracy. They are, however, powerful tools that can help you make informed decisions and reduce risk. So, which strategy should you use? Well, it's not an either-or situation. The most successful traders often use a combination of both technical and fundamental analysis. It's about gathering as much information as possible and using it to navigate the market. Think of it this way: if the market is a sea, then technical analysis is your compass, showing you the direction of the currents. Fundamental analysis, on the other hand, is your map, showing you the lay of the land beneath the waves. Armed with both, you're far better equipped to steer your ship towards profitable shores. And remember, every successful journey requires careful planning and preparation. So, don't rush into trading. Take your time to learn, practice, and understand these strategies. Seek advice from experts, join trading communities, and continuously educate yourself. After all, knowledge is the most precious metal of all. With the right tools and strategies, you can navigate the precious metals market like a seasoned sailor. Risk and reward, two sides of the same coin, and in precious metals trading, this coin shines brightly. Let's talk about the risks involved in precious metals trading. The first one is market volatility. Precious metals prices can fluctuate widely due to factors such as global economic conditions, inflation, and geopolitical events. One day, you might be riding high on a wave of soaring prices, and the next you could be plunged into the depths of a market downturn. It's a thrilling ride, but not for the faint-hearted. Then there's leverage trading. This is essentially borrowing money to trade more than your initial investment. While this can magnify your profits, it can also amplify your losses. Imagine walking a tightrope. On one side, there's a pile of gold coins. On the other, a gaping void. Leverage trading can feel just like that. Exhilarating when you're balanced, terrifying when you're not. Next up is market manipulation. Sometimes large market players can influence the prices of precious metals, creating false market signals. It's like a puppeteer pulling the strings, and if you're not careful, you could end up dancing to their tune. Finally, we have regulatory changes. Governments and financial institutions around the world can introduce new rules and regulations that can affect precious metals trading. It's like navigating a maze that's constantly changing. You think you've found the way out, only to run into a newly erected wall. But don't let these risks deter you. In the world of precious metals trading, risk management is your trusty shield. By carefully analyzing market trends, setting stop-loss orders, and diversifying your portfolio, you can protect yourself from potential losses. It's about knowing when to hold 'em, when to fold 'em, and when to walk away. Remember, trading precious metals can be as risky as it is rewarding. But with careful planning and risk management, you can tilt the scales in your favor. So, can you really make money trading precious metals? The answer glitters brightly: yes! We've journeyed through the enchanting allure of precious metals, understood the dynamic market trends, and unraveled effective strategies for trading. We've also shed light on the potential risks and the importance of cautious navigation. Trading precious metals can indeed be a lucrative venture, but remember, the golden rule is knowledge. Understanding global economic conditions, inflation, and geopolitical events is crucial. Equipping yourself with the skills of technical and fundamental analysis will help you make informed decisions. But let's not forget, every glittering opportunity comes with its share of risks. Market volatility, leveraged trading, market manipulation, and regulatory changes. These are all part and parcel of the trading world. With the right knowledge, strategies, and a dash of caution, you can indeed transform the allure of precious metals into tangible profits. So are you ready to embark on your golden journey?